All right, what is going on, Discord family, and welcome back to another edition of Market Review with me, T. Hobbs. Today is Saturday, March 15th, 2025, year of our Lord. And I feel like it's been a while since I got a chance to talk to y'all, right? Like, because, brother started, some school and all that stuff. So I haven't really been able to do the market reviews like I really, really would like to. But I am back at least for the weekend. Next week I'll be doing 3 out of 5 days, but that's neither here nor there. Doesn't matter because Jay Seal's been holding it down anyway with the market reviews. So as per usual, we'll go over plans for the ES, Nasdaq, and YM, and then we'll kind of see how that plan laid out. It's Friday, so we can actually see how our data projection played out for the week, and then we get you guys out of here. All right. So first and foremost, data projection for the week. All these little red lines were my bearish projections. The last one being 3.02% from the top of the range. That's basically, this one right here was basically from Tuesday. So remember I told you guys I marked two and then I come back in and I marked the last one based off where my cursor is like acting really stupid. As soon as I turn on OBS, I swear trading view just start acting dumb. It started going haywire. Hold on a second. Let me see if I can't fix this on the fly. Oh, it's a lot of freaking tabs open too. Hang on. Let me close this. I'm over here doing homework on YouTube. I had all type of stuff going on. Let me see. Close this. All right, and close this and this and this. New computer is on the way soon. Don't even trip. But in the meantime, we got to deal with the technical difficulties. All right, so let's go back into YM here. Let's see if my cursor. I just oh god, so annoying. Anyway, all right, we'll just do it with the cursor just not following. Oh, it's following now. Perfect. Okay, cool. Okay, so our weekly projection came from 3.03%. That is, the indicator tells us that the ATR, right, was about 3.03%. That's a data low or a data high. It doesn't tell you which way we're going, but we use that data to kind of say, okay, if we're bullish, we should be bullish up 3.01, 3.07. If we're bearish, we're looking at 3.01, 3.03. And then on Monday or Tuesday, it's even more clear because as we always say, 70% of the time, 70 to 80% of the time, Monday or Tuesday brings the high or the low of the week. That held true once again as Monday brought the high of the week. We measured down about 3.02% from 42,752, which was way up here, right? 42,752, that was Monday's high, right? Right up here. And we measured down 3.02%. And Dow Jones, being the good boy that it is, literally closed right at that level, right? Right at 41,462. So don't ever tell me data doesn't work, because it 100% works, because the market is literally just moving data. That's all these candlesticks are doing. But anyway, what was our plan on the day? Current conditions, we were in a bullish retrace of a bearish trend. Now, whenever you guys see this gray box, you should take heed to the title, like the current conditions, because no matter what the plans are, you should understand what the conditions are. So I had a plan to go short at this supply zone, but notice the first target is the daily fib if these conditions stick. Meaning if this is a bullish retracement, we should be looking to get potentially above these highs to start the reversal, right? It's just things to note, right? We're bearish as long as we stay below 41,436, and you can see we slightly traded above that level. We're bullish as long as we stayed above 40,239, and we did, so we remain bullish. Macro, overnight, the bulls once again made an effort to pull back to the highs. Unless we can trade above the previous day high, I don't trust bulls to push. I mean, based off all the selling, could you trust them either, right? I'm looking to participate in the stronger trend down to the daily demand, okay? Now, this is what I wrote, but look at my plan, right? Like, My macro is how I'm viewing price. But when I come in and I look objectively, this is kind of like my feelings. This is my objective thoughts on what I actually plan on doing. If the market comes down here in this green box, I'm definitely looking for longs. Okay. If the market comes into, if it stays into the purple box or the green box, then here's how I'm looking to play it. The high of the range was 41,101 to 40,957. More importantly, look to short the high of the range and long the lows, or in parentheses, break and retest from the high or the low. This is important on days when you start to build context for an actual push to the upside after major selling. Context that we needed to build here. Context clue number one, we've been selling off all week, right? Like, and it's Friday. Like, where else are we gonna go, right? Two, remember these data lows? We're below all three of them by a massive number, okay? So it would behoove the market to get back up to these daily closes to stay within the average ATR. I'm gonna show you some more clues when we come down to the lower time frames, but let's finish talking about the pre-market plan. Bearish, look to short weak rallies in the 41277 through 41436. Look to target daily fib, top of the range, bottom of the range, and finally daily demand. Now, you'll look at this on the 4 hour and you say, man, this shit didn't work. But trust me when I tell you, the plans still work. It's a scalper's plan because, again, you got to understand the conditions of the market, right? And we just went over some of the conditions of the markets and flags that if you didn't see them this week, maybe you could have paid attention to them. You could pay attention to them next week. The other thing that I'll note before we go down to the higher time frame or the lower time frame is these green arrows right here to the high and the red arrow to the low. This is the ADR range, right? So I pull the ADR, right, from the low of the candle here, bullish up, right? It was 724 points. I just couldn't get it to go to 24, but it was basically 1.77%. And you can see we just came within, a few points of this level, right? It just gives me a range for the day that I'm looking for price to go to. So like, if for whatever reason you're getting long up here, right? I don't suggest that, but for whatever reason you're getting long up here, know that you ain't got much room to go because we're close to that data average. You feel me? So, yeah, so that was the last thing on that level. So let's come down to the 15-minute chart and I'll go over some more context clues that you may have missed on the day, right? And I went over these with with Discord members privately, but I wanted to put it on wax so you guys would have it for next week as well, right? So the first thing is back here, okay? Now this is gonna show up much better on like the NASDAQ and the ES, but you can still see it on the Dow Jones. So the first thing is, one, we're in heavy discount, meaning we're so oversold, right? Like if you don't know what discount price is, just think we're oversold. So we're at super lows. And what we're getting inside of discount, heavy discount, right, is you just have to think as amateurly as possible about the stock market. If the market is in an uptrend, it needs to make higher lows and higher highs. Once we came down here and put this low in and we took out this high, right? We put a higher high in. No, we didn't take out the swing high, but when we came back down, we found buyers and put in a higher low. This was still in Thursday's price action. As we closed, we came back up and put in a higher high. And then at the open, we gapped up to go put in another higher high, okay? That right there is very, very bullish. And you need to mark this area. They call this in the ICT land, they call this an in-dog, right? A new day opening gap, right? It doesn't always set up like this because it can gap up, right? While we're in premium too, but context matters, right? Like how you plan on playing this based off context is like how I get to the overall thesis of how I'm viewing this, right? The context is, I already shared with you guys, we've sold off aggressively, right? We created an in-dog, we're in heavy discount, and we're holding the top of the PM session high, okay? The second clue, right? Because I know a lot of people were looking to short this on Friday, right? I could smell the accounts burning, right? Paper trading accounts, demo accounts, whatever. Like a lot of people were looking to short this because they were trading the price action from Monday through Thursday. The second context clue, okay? London 350 price usually brings the high or the low of the week, of the day. This is 350 price, right? Sometimes it's 550, sometimes it's 350, sometimes hell is all the way back here. But look at what price does inside of 350. London lows get swept, they reclaim them immediately, which is very bullish, and then we go up. At this point, if you're looking to short the market, you better be looking to scalp it, right? Because shorts are not coming back below this level. They're just not going to do it, right? Because the market is trying to facilitate to the buyers now. It doesn't matter how much selling comes into the market. They're just going to overpower it with the buying. Fourth or fifth clue, right? Again, I don't know what number I'm on, but I'm just going to say fourth or fifth clue. We make a new high, and then New York Open, which is, 730 price or whatever, right? New York Open price holds price again, right? Like this was the news candle. We came back above the news candle and we held that price again, right? And then we rallied. Like there were so many clues to take the market long. And on the S&P 500, it was even cleaner because I don't even think we swept this low. And this is the shit I be talking about Dow Jones, right? Why I kind of moved back over to the S&P until the volatility comes back down. But anyway, if we put all of that together, right? These are things you should be looking for before you start trading. And then in addition to that, when you get ready to enter the price, right? This is when we start to follow time, okay? So if we go over here, our pre-market plan, like I said, when I told you guys earlier, well, the pre-market plan didn't work. Yes, it did, right? 4-hour supply, right at 41277. Look to target daily fib. If you hold longer than this, understanding that this is a higher low, that's on you, right? But I gave you the out, right? The first out is daily fib. The second out is top of the range. It hit both of those, right? If you hold past this level, that's on you. I can't control your every trade, right? But I can give you an idea of where price is going, right? But to the other bullish plan, we said we wanted a break of this high, right? PM session high. So a break, we wanted to see candlesticks break above the high, right? And then a retest. If you didn't trust this 930 candle, that's fine. But remember, 930, you want to see trade down, right? So you can get longs going back up. 950, you want to see trade down so you can get longs going back up. But in regards to our pre-market plan, we wanted to see a break. These right here, this consolidation right here, this I don't consider a break yet, right? Like it is above it, but I don't consider it a break because we could just fail, which we did initially. When I say a break, I'm looking for aggressive candles like this. This is when buyers are saying, yeah, we getting the fuck out of this area. And a break of this consolidation high, that lets me know, okay, now I'm looking for the break and retest, right? There's a difference between consolidation and a break of structure. Sorry, I'm sick still, but because then we get the break, the retest here, right? And then we push. Again, the S&P did not do this, right? I don't think the S&P swept the news candle. And that's another reason why I moved back over there, because we're so illiquid on the Dow that we'll sweep this news candle and then go higher. With the S&P, I think they just came back into 50% of the wick, which we'll cover here in a second. So now we're pushing, right? So I don't really care about 1025. I don't care about 1045 right now because we're in an uptrend. Why are we in an uptrend? Well, let's think about Wyckoff. There's three phases of Wyckoff, right? You got consolidation, manipulation, expansion. The consolidation was from 830 to 910, right? The manipulation came inside of New York Open. The expansion came at 950, and then we manipulated back down, right? Or this is basically the retracement, right? The reload. And then we expanded back up. We continued the expansion. So during the expansion, I don't really care what price is doing inside of these macros, right? I don't really care because I'm looking at this on a higher time frame. So once I get this entry down here, I'm watching price on like the 15 minute, right? Or the 1 hour, right? I don't really give a shit because I know that the market has a goal and it's not going to reach that goal just to, mess over my account. I used to think that way. right? I used to think like the market's out to get me. It's like, no, inside of this 15-minute candle, this thing might have pulled back 50 points, 100 points, and I sold. That's on me, right? If the candle closes and it continues to make new highs, right, then I could just hold to my target, which my target would have just been the high of this supply zone, right? But I would start pulling in profit up at 41,277. All right. So that's the breakdown on the Dow Jones. Let's move over to the S&P 500, and I'm not gonna review anybody's plan. Yoga made a great plan. Justin had a great level. I just don't think we came back to his level. His level was basically 55, 55, right? It was like right here, right? We never really came back to that level. But I'm just gonna freestyle it because Yoga's plan, Jay Seals' plan pretty much lines up with what I was looking for on the S&P 500 on the day anyway. So I'm just gonna freestyle. It is what it is, right? So we know our chessboard is here, right? It was lined up with the daily fib, right? We had our highs at 55.65 through 55.55, our lows 55.22 through 55.09. Remember, here's the context clue right here. Here's the gap right here, right? Just like I talked about. Look for these gap ups, right? Anytime, listen, I'm not an addict per se, but I kind of am, right? But anytime the market opens, I'm not looking to trade it. I'm just looking to see how they open it, right? Because there's context clues in Tokyo Open, right? They will tell you a lot of times what they're trying to do, right? And I'm not telling you, hey, if you see a gap up, it's definitely going up. That's not what that means, right? You have to take into consideration the whole context of the market. And ES was clean. Look at this. Shoulder right here, right? We take this, let me take my little tool here. Look at this. We had our shoulder here, right? This was all happening inside a PM session from Thursday. We had our head here, right? And then Tokyo session, the reason why we gapped up is because we were facilitating that other shoulder, right? And then we bull flagged here, right? Right there, consolidated, swept the low of that range. PM session or London brought the low of the day right here, right? And once that low was put in, we never swept that again. Remember, this is why I like trading the S&P during high volatility times over that of the Dow Jones, NASDAQ, or gold, because look how strong this level was for the S&P compared to the Dow Jones. It was still a strong level, but the Dow Jones swept all of this shit, right? The S&P said, nah, we good here. We pretty liquid here. So we're going to hold. So they held inside of 550. They held again inside of 10 a.m., the news candle, right? And then they ended up pushing. I ended up taking trades after I got my ass killed on GC, right? I got destroyed on GC, but I came back, ended up having a great day, actually. The day turned really, really green, but ended up taking longs at 55.84. I built a position from 55.77. It was in like 3 contracts. I took it up to 56.20 was my target. Hit target and then immediately pulled back, and then we ended up pushing up to like 56.32 or whatever. So a lot of skin on the bone. I mean, ultimately we just kept pushing, and it was a really clean day. As long as you weren't looking to short this all day, that was like the only mistake that I could see people making, and I understood why, right? Like, I've been that person that be like, nah, man, they're gonna dump it here, they're gonna dump it here, they're gonna dump it here, and it's like it just never comes down, right? So understanding the context matters, right? And the big thing is checking these 4-hour candles, checking the daily candle. And I mean, look at this. We didn't put in one red candle since 2 p.m. Thursday, right? So that's telling you something, that the market is very, very strong and you don't want to short the strength. And the market knows, right? Like, I shouldn't say the market knows. What I should say is the market makers are very aware that retail traders are pattern type traders, right? Like, we trade patterns, we trade candlestick patterns. So they're going to show you the same shit that they would show you on reversals to stop you out of your positions and get you trapped. So they show you this inverted hammer candle. You take the short right here, and your greed is telling you we're going for previous day low. So when you're up 55.99 to 55.64, you're up 30 points. You don't take any of it because you're looking at this like a lower high, and then next thing you know, the market hurry up and runs your stop. What I would tell you is you need to be aware that when the market starts to shift, it's gonna show you the same thing it was showing you when it was in the other direction. Meaning, if it's been showing us aggressive sell candles to the downside and they've been breaking structure, what do you think it's gonna show us when it starts to rally up? It's gonna show you those same candles, except it's not gonna break the structure, and it's gonna play on the fact that you're gonna be impatient and not see the fact that we didn't completely break the structure on the candlestick. So be aware of that, and then we'll move on to the NASDAQ. Like I said, I'm a little under the weather, so I'm gonna finish this up quick. All right, so NASDAQ, again, we'll come back down here to the 5, and we'll look right here. I think the NASDAQ had it the best. Yeah, NASDAQ does gap up real well, right? Like, so 1800 opening price right here, you can see nice clean gap up, right? If the market closes this gap, it doesn't need to come back down here. You can see it gapped up, closed it real quick, and never came back down here, right? And if it's not coming back down to this gap, then it's probably looking to make new highs, right? I'm not gonna beat a dead horse. You guys can see the chessboard worked out phenomenally. 550, 350 brought the low of the day, right? Higher low being placed, broke the high, broke it right here, came back down during the news candle, retested it, gave you beautiful entry criteria, swept midnight, swept New York open, daily fib damn near tapped. Like, NASDAQ was clean, easy fucking money, right? And I think this was like, I don't know, like 200-300 points back to the upside. Yeah, 200 points back to the upside. Just very, very clean. And then last but not least, we'll talk about the volatility index, because this was, again, I was screaming this in via text message, because, you know, I was just been under the weather. But I was screaming this in text message. Check the VIX. Check the VIX, right? Because the VIX, when it's this volatile, the VIX is going to tell you what's happening, right? If the VIX is selling down, right, and it's coming down from this high, I don't care if it's at these lows, right? Because it's probably going to break these lows. Remember, when we were bearish on the indices, we were consolidating at lows and then crashing through them, because everybody wants to get long at the lows. It's the same thing with the VIX or any instrument. And it's vice versa at the highs, right? They consolidate at the highs and then they burst through them. Because think about it like how you want to trade, right? If you want to get the early entry, right, you don't want to wait till price goes up and come down. Most people don't. So they start loading into buys right here, and the market's betting on that. So it just sits price here. Like, it'll sit this candle here for like an hour just to accumulate enough people to go long, and then it dumps it on them. Then they're thinking, well, maybe it's still going up. And then they give them this candle and they dump it on them again, right? So just understand how the market moves, and you won't get caught in these little traps. And furthermore, if you zoom out, right, to like the 4 hour, and these candles are still, if this candle drops below this candle drops below this candle on the 4 hour, we are in a downtrend. It is no question, right? When you're looking at shit on the 4 hour, it is very definitive, okay? So you got to take the VIX seriously when it's down negative 2.7% or whatever it was that day, right? You got to take that seriously, because that's going to tell you that we're not coming back up anytime soon, or we're not coming back down anytime soon on the indices. So VIX, Dow Jones, S&P 500, NASDAQ, that is the market review. My name is T. Hobbs, and we'll catch you on the next one, man. Peace.